Welcome, everybody, to today's Mastering Condos and Condotel Financing. For a moment for our host and myself, co-host.
Hold on, Mark.
We froze.
No. Oh, did I? Can you hear me now?
I can hear you now.
Okay, sorry. Yeah, in case that happens, just in case. Technical issues on my side, but just let's start from the top. This is Carl Holman, Communications Manager here at A&D Mortgage. Welcome everybody to today's webinar. We've got people starting to trickle in. We'll get started in about a minute or so. Today's topic, as we were just discussing, is going to be mastering condominium and condotel financing. So we'll cover a whole host of areas around the topic. I'll go ahead and cover the opening part, and then we'll turn the mic over to our speaker. So our speaker today is Mark Glaser. He's one of our top account executives. We're going to cover the basic areas of what the condo market currently looks like today. We'll explain the differences between condos and condotels, take a look at some financing options, help you guys understand what the risks and returns on condos and condotels are, and then review some of the products that we offer that can enable you guys to close some deals with condos and condotels. A couple of housekeeping rules. We've disabled the chat function, so if you've got questions, go ahead and type them into the Q&A. But also, if you can turn off your cell phones, don't take any calls while we're covering the topic. That way you get the full advantage. And the first question is already the one that I'm just about to talk about, which is, yes, we are going to be recording this, and we'll be sending it out along with a copy of the presentation within the next 24 hours. So you'll get a copy of this very quickly. All right, with that, I will turn it over to Mr. Glaser. Mark, take it away.
And good afternoon, everybody, and welcome to the condo call. A little bit about A&D Mortgage. We are a mortgage lender. We also have an imperial fund that backs us up for lines of credit. So we are a direct lender. We finance with our own funds. We securitize our own funds. We create securities, and we also create bonds. The money we lend is our money that we securitize. We do not sell to individual banks for our underwriting guidelines. They are our guidelines. Continuing on. So A&D Mortgage has put together a platform called Integra. You're all currently using it to upload. The process that we use to do this, we have the ability to import your files. We have the ability to use a quick pricer, which is on the front page of our site for you to do pricing, to see without having to log in where you are as far as rates for the day. And we have the ability that when you do upload your files and import them into the Integra, we do not redo your credit. We only reissue your credit, and that's done in our system where you upload your files. It's a full package upload, and then finally on to submission. So A&D Mortgage pretty much can do several different things when it comes to licensing and lending. So there are a number of states. If you see in the light purplish blue, those are the states that we can lend in where you do not need a mortgage broker license. Those are business purpose only states where you can do investor loans without a license, as opposed to the other dark colored states that require you to be licensed, whether you are generally for primary and second homes. And then the purple states, you don't need to be licensed at all. When you go looking at our rate sheet, you'll be able to see on the rate sheet towards the middle of the page, it'll tell you where a license is needed, the states that you need a license, and the ones that you do not. So basically, why are we doing the call? The call is because in a large number of states, the condo market is offering the ability to buy uh, currently with a little bit of a lesser value than buying a single family home. Condo living also gives you the ability to have all of the amenities. A large number of purchasers are buying in these realms. And of course, the Condotels. A&D Mortgage is lending in Condotels. And generally, we're at around 70% loan to value for the majority of the Condotels. And we're able to allow you to do that, but only on an investment purpose basis. Condotels, there's well over 100,000 currently, and the numbers are growing, and we are able to lend there. So let's talk about condos in general. In the state of Florida, it's really more prevalent, but then it does expand out into the general states, the non-warrantable condo. So non-warrantable condo, of course, is one that is new construction, where the developer hasn't turned over the HOA, where basically they're not completely sold out, but a new construction, we require it to be 75% pre-sold and under contract. In the case of non-warrantable condos, it could mean they don't have reserves. It could mean that they have litigation that doesn't involve the construction of the property, any type of safety issues, any type of work being done. That's would make it non-warrantable. The developer can be involved in regular litigation as opposed to the building itself. Condotels are considered non-warrantable. There are different aspects. Generally, if it's a Fannie Mae approved condo, that's warrantable. If it's not, generally there could be issues going on right now having to do, once again, with reserves, having to do with insurances, having to do with anything that makes it not be a standard everyday warrantable condo.
All right, Mark, before we go on, Diane has a question about the non-warrantable condos. Can it be an existing property, and do you get a condo questionnaire or not?
So A&D has a limited condo questionnaire form. It's 1 page. We usually do it internally, but if you want to find out ahead of time, you can send it out, let us know, and then you'll be aware if there's any issues that compound it being a non-warrantable, that may be issues that we can or cannot overcome. Lately, insurances, we were able to know that no longer you require the 5% minimum deductible. It can be higher, 10%, 15%. Fannie Mae released the cap on the minimal deductible. What was the other question? It's an existing building, could be non-warrantable. Yes, it all depends on the condominium, what they've chosen to do. Some have chosen to waive their reserves. Some have chosen to do their 40-year inspection, are in the midst of it, and some are in litigation. These are things that make it a non-warrantable condo. Okay, Carl, there we go. Questions? Okay, we're receiving some questions and answers. So let's see what we got here. Existing property, correct. The recording this is a recorded, and it will be available later on. And issues that could stop a loan from going through: litigation concerning the structure of the condominium. What else? Litigation's big. Having an assessment where the assessment has something to do with construction for the building, if it's currently going on, and does the construction have any safety issues? A lot of these are questions that could make the condominium non-warrantable and could interfere with you moving forward. Anything else?
Okay, think we're ready to move on.
Yes, sir.
All right, sorry, there we go.
Okay, so when we do limited reviews and when we do full reviews, let's first talk about Florida. With Florida condominiums, they're a little bit different. In Florida, since we had that Surfside collapse on the beach, non-owner occupied investor condos in Florida are going to be at 70% loan to value for limited review. When you have owner occupied limited review in a condominium, it's 75%, and second homes are 70. Outside the state of Florida, it's a great place for limited review when you're owner occupied to 90. Second homes and investors go to 75. As always, as far as construction, limited review, 100% complete. Depending on the condominium, some of the amenities can still be under construction, and there's something called a TCO where they CO the floors. We'll accept those. We don't do motels generally. We don't do, and in situation where there's mandatory memberships, we're required to get exceptions if that's the case. We allow up to 35% commercial space to be in a property. And then depending upon the number of units, when it's a large building, no one can own more than 20%. As far as the Condotels, we would like 500 square feet. We would like a one bedroom. We would like a kitchen. But I have done under down into the 350s to 400 square feet on Condotels. We've done the studios and we've done kitchenettes. Please let me know when those occur, and then we are able to do exceptions. Full review condominiums, as you see, 90%, second homes to 85. But again, this is going to be outside the state of Florida where those are opportunities. And our full reviews allow the condos reserve budget to have 8% versus Fannie's 10%. Continue. Any questions?
Yeah, there's actually quite a few that just came in. So let's address those first.
Okay.
I think we may have answered this one when I went off briefly. Who determines if it's non-warrantable? Did we cover that one?
Yeah, well, non-warrantable is determined by the condominium not carrying reserves, by the condominium being a new construction, being a condo hotel. Various things could make it. It's under assessment and there's issues going on. There's lawsuits going on. All of these are earmarks of a non-warrantable condo.
Will we lend on a project that's brand new and where the first unit's just been sold?
We only lend on a project if it's 75% pre-sold. And generally we need comparables sold in the property to generate what do you call it? To generate the appraisal.
Okay. Outside of the non-warrantable hard stops, is a non-warrantable still able to be funded?
Well, again, hard stops, that's an interesting question. If the property is currently doing an assessment for construction for defects in the property, those are going to be the hard stops. If there is a lawsuit in the property and the lawsuit is a huge amount and it's not covered under the liability insurance, that could be hard stops. It's case by case.
Okay. What if the TCO has expired?
Then you got a big problem. If you're purchasing a property and it's newly has a TCO, let's say in a condominium, there's no such thing as expired. You can't close if there's an issue. An expired TCO may mean that the condominium went past the period that it needed to finish. It'll need to be looked at on a case by case, perhaps an exception for that.
Okay. All right. Let's answer one more. There's a whole flood coming in. We'll reserve those so we can get through the rest of the content. This is kind of an example from Danny. In Southwest Florida, there was a hurricane that damaged most of the common elements like the first floors, parking spaces, tennis courts. The units were not damaged, still furnished and in great shape, but buildings are not occupied because of lack of electricity and common elements. The seller's properties listed are paying all assessments at closing. Are they financeable?
No, that's a hard stop. The building was evacuated. There's a lot of stuff going on. That would probably be a hard stop.
Okay. All right, let's move on, and we'll get to the rest of the questions as we move along. So let's go ahead and pick back
Condotel.
up. Yep.
So a condotel pretty much is a hotel that has reserved spaces to for sale, and it gives you the opportunity, a renting opportunity, to take part in the regular everyday with the regular everyday hotel activity, and you own pretty much a hotel room, which is the general book of the hotel, the condotel, for daily and nightly rentals. So you own them. You could own them in a personal name. You could own them in a corporate name. They are all investment properties. Generally, the condotel unit is in the general book of the hotel, the condotel to rent. And of course, the services have, when you walk into a condotel, it looks just like a hotel lobby. Concierge, housekeeping at your leisure, you could choose to do or not do such things. And then the maintenance is provided like a hotel. Okay. So when you're looking at condominiums versus condo hotels, the condominium is not a daily, nightly rental designation. It doesn't mean that you can't do Airbnb in a regular condominium. In a regular condo, you can own it as a primary. You cannot a condotel. In the management, some have hybrid management. Some are managed by HOAs, and some are just managed as a hotel operator. The programs, the rental programs in a condo, there's no set rental program as there would be or maybe in a condotel. Services, the residents are responsible for the maintenance of your unit. In a condotel, it's hybrid. So there's choices that you can be responsible, or I'm sure you pay the additional maintenance and you're not. The income for rental condominiums at A&D can be long or short term, a regular condo hotels. You have, again, the short term rental ability. Plus, depending upon pricing, we could see whether long term will work for you, but a lot of times it's just the short term. Amenities, of course, in a condotel, you're familiar. In a regular condo, it's the normal amenities that a condo offers. Condos, primary second home investment. Condotels are what do you call it? Are just a hotel. So we have a question.
Yeah, there'll be periodic polls running throughout the course of the presentation. Mark, keep going.
So yeah, I'm gonna put that aside. So let's move forward. Continue. Are we getting more questions on this? Gotcha. So condominium financing versus condotel financing. So with the condominium financing, pretty much the buyers in these associations must be aware of what their responsibilities are in a regular condominium. We require in both condotel and condos that the properties generally be finished, but on some condos, you can have temporary COs as they CO the floors. As far as the types of lending that we do debt service coverage for both condos and condotels. We underwrite the rental income through the debt service program, pretty much the same for both condos and condotels. We could do at 70% loan to value, less than 1 to 0. Condotels outside the state of Florida, we go to 75. That goes down to 0.75 and so on. Regular condominiums, depending if they're Fannie Mae approved, can have higher loan to values for financing. If they're limited project review, you're at 75% in the state of Florida for primary and second home investments, you're at 70. Outside the state, once again, you're able to go to the higher LTVs on primary and second homes, and you're able to go the higher LTVs for as well as investors. Any questions?
Not yet. I'm gonna, again, we'll reserve we'll do the questions towards the end. We still got a little bit of
Okay.
to cover.
So why is one wanting to delve into the Condotel as an investment? Obviously, because it's a great revenue um, place to earn a living. Again, you're basically buying something that has the potential of getting income on a daily basis. You have the amenities and services. You have, as an owner, you also may have the ability to go to the pool deck. You're able to take advantage of some of the downstairs that a condo hotel, a hotel offers. And the financing strategy, once again, most condo hotels take advantage of A&D because we are a non-QM lender, and that's generally who lends on condotels. As far as market vulnerability and volatility, understand again, nightly, daily rentals, you're able to, and sometimes where markets get a little slower, you can continue earning a decent return based on a nightly, daily rental versus a regular condo, which is generally a long-term rental. Any questions?
No, no additional ones. Talk a little bit more about the personal use benefits for that.
Well, again, as a condotel, they are investment-only properties. So, but when you purchase as an owner, you have the ability in a lot of the condotels to use the amenities. You cannot occupy a condotel unit. Again, it's strictly investment. But when you purchase them, you have the ability to take advantage of the amenities. There may be restaurants that you get discounts at. There's the pool decks. There's some of the, I guess, the gyms and things of that nature that you have the ability as an owner in the building. But once again, you cannot occupy them. They are strictly an investment property.
Okay.
So we were talking earlier about condos and what's occurring during these days. So in the state of Florida, you run into a lot of the 40-year inspection. So in the 40-year inspection, these may come out with special assessments. So after 40 years of the ownership of the condo and it's been in existence, things start to happen, and structural, balconies, parking garages, pool decks, all of these things start to show wear and tear. You need to be aware when you're looking at a condominium, the health of the condominium, and if there's any special assessment currently in place, and you need to know why. Does it affect safety? Does it affect anything having to do with the structure? Are there any issues? We talked earlier about insurance coverages. Fannie Mae just changed the rules. It no longer needs the minimum 5% deductible for a condominium's master policy covering the entire building. So good for us. If you have a 10% deductible, exceptions are no longer needed. I've seen them even higher than that. In the state of Florida, insurance is becoming a big part of maintenance, larger than imaginable. And this is coming into play. Building regulations and compliance. Once again, you got to make sure when you are looking at a condo's health, in general, talk to your realtors if you're asking, are there any known issues with your condominium before you go forward? Really, really important.
So, what advice do you have for brokers, particularly because I'm one of the questions that just launched? The predominant answer that most of these folks are having is how to explain the HOA regulations and fees to their clients. So, do you have any tips or advice?
So when you're looking at HOA fees, before you purchase, your sales contract should have on it whether there's any pending assessments or were there assessments already in place. It'll also tell you whether or not, when you look further into the health of the condominium, that if there is an assessment and there is construction that's going to go on, whether they could continue occupying the unit during the construction. whether it's structural, whether it's safety. You need to be aware of all of that. So your maintenance may be today $600 after the special assessment. After the new insurances come out, that 600 could easily go to 900 or 1,000. So it's important when you're doing a purchase that you speak to the realtors, you let your clients know, and they're aware of what's going to be transpiring, which when the appraisal comes back may show, or when the condo questionnaire comes back, we have a limited review, our internal, which is 1 page, which if anything pops up, you'll know, and there may be issues having to do with the HOA and the maintenance.
Great. What about helping people assess the rental income on the condos or the condotel properties?
So A&D Mortgage is interesting in that realm, pretty unique. So when you apply to a mortgage for A&D, when you're doing, let's say, a regular condo, you would apply in the long-term rental situation. That's what the box you would check, long-term rental. And then internally, we have the ability to do something called Air DNA. So right after a loan is submitted, we can let you know whether or not through our short-term rental calculator, whether it will equal to a 1.0 debt service, giving you the best rates at 1.0. If the internal calculator is not working, it doesn't help you 1.0, then you could move forward with your appraisal and do a long-term rent schedule, even on a condotel. And under that circumstance, if it's less than 1 debt servicing, your rate will be better than using short-term rental. We have the Air DNA, and or if it's just plain old not occupied, we could do vacant properties using the CR program. And under that circumstance, we'll go right off of the 1007 rent schedule. If the property is currently rented with a lease, we will take the lease, provided it's not 25% more than the 1007 long-term rent schedule in the appraisal. If it's over 25%, then we're going to just use the 1007, which would be lesser of the two.
Great. Before we go to the next one, let's go and take a couple of questions and go back through the rest of.
Okay. Go ahead with your question.
So Jesse's got a question about whether foreign nationals can do any type of condo or condotel.
Yeah, foreign nationals at 70% loan to value could run the span of any of the condo hotel investment properties.
And then earlier you had mentioned something about a difference between 8% versus 1%.
So what it is, it's 8% versus 10%.
Oh, 10.
So the Fannie Mae requirement is that you have 10% reserves for a full condo review. A full condo review at A&D Mortgage, non-QM, which could be a primary home or second home, a full review, we allowed 8% reserves in the condo budget.
Okay, I think you may have just addressed this one, but if they're doing the DSCR, the appraisal will be ordered with a 1007, the short-term rental.
The long-term, we're recommending you order it with a long-term rent schedule. But when you submit, if you believe it's going to be a short-term rental that the calculator will work, we'll run the calculator. If the calculator equals 1.0 or better, then you don't even need to run the 1007 rent schedule. If the calculator is coming in at less than 1, then you order it as a long-term rent schedule, because the rate will be better on a long-term rent schedule less than 1 than a short-term rental calculator less than 1. So these are all things that you're going to talk to your account executive before you submit the file.
Okay, this will be the last one before we go to the next section. So to clarify, where is it stated warrantable or non-warrantable on paper, so that there's no surprises during the underwriting? This person had a contract that was pulled because they thought it was not warrantable.
Okay, so non-warrantable is not a defined subject. It's a subject of whether or not the condominium has the requirements. So a non-warrantable, condo hotels are all non-warrantable, step 1. Properties that are new construction are generally non-warrantable unless Fannie Mae has approved them. Otherwise, the non-warrantable runs the gambit. When you send in the condo questionnaire and it comes out with budgets or no reserves, it comes in whereby there's litigation. It comes in where there's a special assessment involving some construction, but it being is not warrantable, where we could determine that construction is safety or not related to safety or structure related that will affect the owners of the property. Each area makes it non-warrantable. We don't have a hit for non-warrantable. What we have is a loan to value associated with non-warrantable.
Okay, great. Thanks. Let's move on to the next topic, which is assessing the risks.
So when you're looking at a condominium and you're looking at market, volatility, of course, you're going to be looking when your borrower's purchasing, it's all going to be subject to the borrower's wants and needs. So again, they're purchasing in a certain area. You're going to be asked questions about that area, whether or not the prices are going up or going down. And you're going to want to know these things so you can answer the questions for your borrowers. Rent income projections, we don't do. We stick solely with the 1007 or the current rent or the our internal calculator. As far as historical data, this is going to be you having good communications with your realtors when a borrower is purchasing a condo or a condotel, to know that when they're buying in there, what they're going to be. So the management agreements, the ongoing maintenance costs, the rental income projections, all of these things, you should be having a condominium or condotel discussion with your realtor so that you are educated on the building that they're purchasing, the condotel, and that you're able to give some information to your borrower as they move into these properties.
And what about the management agreements and maintenance costs?
Well, the management agreements, these are all the HOA dues and any of these things. It's going to be inside the sales contracts. It's going to be in there if there's going to be issues or any things of that nature. So all of these things in this particular slide are you having a good conversation with the realtor and you being able to give this information, the agreements, any assessments, any ongoing maintenance costs in the sales contract. When you get them, you're going to see whether or not there is an assessment that's being paid for by the current owner. Will that result in a higher maintenance? You're going to find out whether there's any agreement issues. It should be in the sales contract. So look, condo hotel sales contracts over. Be aware of any requirements, whether they're required to be a member of the club or the clubhouse. You want to be aware so you can make your borrowers aware.
All right. So now we can talk about ways that we can help them, which is how to get the funding. So this may answer a number of the questions that are still sitting in the queue, but let's go through and we can talk about what we do as a lender to help our brokers and their clients.
Okay. So what you're looking at here is this is the full spectrum of what A&D Mortgage has, and it can be applied to condotels, condominiums. We offer the debt service program. We offer the P&L program, no bank statements. We offer the bank statement programs and a normal non-QM full doc loan. So you could use all of these programs on a condominium purchase. But be aware that if you do a debt service loan and it's not working out, you could pivot to a possible P&L loan or a bank statement loan if the debt service loan isn't working. As far as qualifying, non-QM is, of course, flexible. It has the ability that you just don't need a full doc. Tax returns, you can move to the debt service, P&Ls, bank statements. And of course, regular condominiums has the ability to have primary and second homes. And condotels only have investment abilities with A&D Mortgage. New construction condominium. So you have a minimum of 75% pre-sold before A&D Mortgage will start in a building.
properties with litigation in the budget reserves?
Yeah, well, we've already gone over that.
Okay.
So as you know, not new construction, litigation and reserves would be an established condominium. And then once again, when you do the limited project review form, you're going to find whether there's litigation. You're going to find whether there's any kind of special assessments and so on. And with that, you're going to know through that whether or not it's going to be surmountable. Or of course, A&D Mortgage does have the ability to do exceptions. And then don't forget to ask your AE if there's a sticking point, whether it could be accepted or not. Now on to the program. So as demonstrated in front of you, we have our debt service programs. We have our 1 year, 2 year P&Ls. 1 year, 2 year P&Ls do not require bank statement backup. A lot of lenders require 2 months bank statements with a P&L. We do not, but it must be prepared by a tax preparer or a CPA or any kind of a certified agent of the IRS. So registered agent, but again, it needs to be generally tax preparer or CPA. The debt service loan, of course, stands on its own with the appraisal. If there is a lease in place, we have to go with that lease unless it's more than 25% of the 1007 rent schedule, then we would move to that. And again, before we even move in those directions, if you believe that the Air DNA short-term rental calculator, our internal one, may help you, speak to your AE and you'll request it at submission to see if it helps or does not.
And Diane had a question specifically about DSCR, about whether we can do them below 1, a ratio of 1.
Yes, so generally, depending upon the property and the credit score, we could do 99 instead of 1-to-1 ratio, 99 to 0.75 at a 75 debt service. And at 70% loan to value, we could go all the way down to 0. Again, 0. It doesn't have the debt service at a 70% loan to value, depending on the credit score.
And can they close under an LLC?
So on investor loans, all investor loans, whether they are P&L, debt service, bank statement, investor loans can close at an LLC or in a corporation or in a revocable trust.
I think I may have just froze.
Okay.
Keep going.
Any questions? Okay, we're going to go look at some more questions. Take a look. So we're going to go see here. Let's see. What issues could stop a loan from going through? Of course, the appraisal, credit scores, anything having to do with the credit score related to your debt service. These are things that could stop a loan. Continuing on, let's see, questions and questions. We do lend on brand new projects. As we said earlier, it needs to be 75% pre-sold. Continuing, we discussed the TCO expired. And then if there are problems or damaged buildings, we don't do damaged buildings. We were discussing that earlier. Let's see, anything else of some good questions? And again, appraisals are ordered in our appraisal site, which is our appraisal center. All of your appraisals will be ordered through there. If you're doing a transfer, the transferred appraisal must come from another lender, not the lender itself. So if you are ABC Lending and you sent your loan to a competitor, let's call the competitor, I don't know, Investor Mortgage, the appraisal should have Investor Mortgage on the appraisal. And then you'll get the transfer letter. You're going to get the HTML. You're going to have the appraisal itself, the SSRs, the air certificates, and so on for transfer. We currently do not do to be determined approvals. Our minimum loan amount is $100,000.
I'm back, Mark. Sorry,
no, we're just going over the questions.
Okay, good.
So, in reference to the 100% replacement cost valuations and so on, we have exceptions. We need to see the insurance before an exception is going to be required. Okay, so the insurance explanation. So prior to Fannie Mae making the change, it was always required a 5% minimum deductible on master policies covering the entire building of units. Now Fannie Mae has lifted that, and we follow Fannie Mae when it comes to insurance. Because when you want to securitize, you want to make the parties who are buying your securities know that there's good insurance in place. Fannie Mae has lifted that requirement, so we could go higher than the minimum that used to be 5%. Generally, there's no minimum on insurance deductibles. Let's see. Sufficient reserves normally are 10%. We permit 8. Questions about Venezuelans. When you have a Venezuelan borrower, you need to speak to your account executive. And then when they're submitted prior to ordering the appraisal, our loan committee will look at them to see if they qualify or not. Okay, we discussed debt services below 1 at 75 to 75 and at 70 down to 0.
Okay.
How do you know if a condo has reserves? You obtain the budget from the realtor, which is required when you purchase. They have to show the budget, and that's again only for full condo reviews. Most of our condos are limited project reviews. That's why one would come here on a non-QM basis. How do you know who your AE is? You could email. I'm the East Coast sales manager here. So if it's on the East Coast, you could email me and we'll see who your AE is. Rec leases are done on a case by case. And revocable trusts, you could close it, only a revocable trust. See, bank statements. On bank statement loans, generally business bank statements are the best. We initially look at them at a 50% debt ratio as far as expense factor. And if the CPA or tax preparer gives you an expense factor, we'll go with that. Personal bank statements generally have issues with 100% deposits. If the deposits are 100% as a business, they're going to count 50%. If they are meaning that the business is directly depositing there. If they are coming from their company, that's where 100% has the opportunity to be used. Personal bank statements on a case by case.
Mark, do you want to look at, we have the bank statement information on screen, so if you want to cover
we were
that.
just discussing, yeah, we've already proofed that. We're good.
Okay.
Yep, and we can move to the next screen.
Well,
now, one more thing, we have 2 programs available. One is called Super Prime and one is called Prime. If you're using an ability to pay the loan, meaning bank statements, profit and losses, anything having to do with 1-year tax returns and so on Super Prime, we permit bankruptcies, foreclosures, short sales having to occur. These are credit events 2 years and 1 day ago. And you have traditional trade lines. When you do our Prime program, we permit credit events, bankruptcies, foreclosures, short sales 1 year and 1 day ago. And we also allow 30-day lates on a mortgage. Now we're open to questions.
Okay. All right, turn times.
So generally, turn times, you're usually approved within the first week and you're closed within 30 days. Once again, ordering the appraisal through our appraisal center is now a requirement.
And then on primary, secondary or investments, is the max LTV 70%?
So investor loans, depending on where you are in the country, are 70 in Florida, limited review, and 75 outside of Florida. Second homes generally are 70 in Florida, 75 outside. And then primary residence outside, again, we're talking about the limited reviews, can go up to the 80s towards 90, depending upon the state and so on.
Okay. All right, I think we've had quite a few questions. I think we've gone through the whole list. So I'll move on to my section very quickly, and people can continue to ask questions, and we'll get right back to them. So,
And then one more thing to add to the question. There was one concerning a primary residence limited project review in Florida is 75%. Primary and second home. Okay, I'm sorry. Primary residence is 75%. Second home is 70.
Okay. All right. So if people are interested in following us on our social media, they can quickly scan this QR code. Again, you'll get a copy of the presentation. So if you can't whip out your phone, since we told you to turn it off, you can do that after I send this to you. But you'll find a link tree that'll take you to, I think at this point we're on everything except WhatsApp. So Facebook, LinkedIn, Threads, Twitter, Telegram, all kinds of stuff. So to summarize a couple of our major talking points about us as a lender, for those people who are not currently partnered with us, this is a good reason to partner with us. So as Mark's talked about, we've got a fairly streamlined loan process with very fast turn times. And a lot of that comes down to three major factors, which is our account executives. They're willing to do whatever they need to get a loan closed for you. And they're pretty much experts on every type of loan situation that we've got going for condos, condotels, I think everything except barn dominiums, which I only learned about those about a week ago. In terms of our loan solutions, we've got lots of non-QM programs as well as the conventional and FHA programs. But as Mark mentioned, we are the proprietary underwriters of our non-QM programs. So we have the ability to change the underwriting criteria, gives us a lot of flexibility in who we can and cannot lend to. So that's a strong backing that we have. And it's pretty consistent whenever we talk with brokers that these four things are the things that they consistently tell us that they really like working with us for. So if you're not currently a partner, I'd encourage you guys to go to the website and start filling out the Become a Partner page. And then the blog, we provide a lot of information on our blog. I think some of you may have signed up for this webinar after receiving a couple of the articles. We've done a 4-part series covering some of the in-depth, some of the topics we've covered during this webinar. So if you missed one or two of them, you can go back through and find them, and I'll include links to all 4 of those articles in the follow-up email that'll have the presentation and the copy of the video. I don't think Mark had mentioned it, but for those people who have licenses in Alabama, Arkansas, Connecticut, Massachusetts, Mississippi, New Hampshire, West Virginia, Wisconsin, or California, we're running a special for the rest of this month where you can get a 25 basis point excuse me, lender credit on all the non-QM transactions with FICOs above 700. So if you've got any people interested, that could include any condos or condotels found in those locations. So make sure you take advantage of that. And then we've got a couple of additional webinars that are coming up. Next week, we're going to do a fairly super deep dive into all the types of non-QM loans that we have with Carla Biancanello. She's one of our top AEs. She works and was trained with Mark. So she's definitely one person you'd like to have a webinar with. And then we're going to cover one called Navigating Volatility. So these are going to be broker strategies for helping you guys succeed in the current market environment. It'll be about lead generations and a few other areas. This is going to be delivered by our CEO, Max Lucerchuk, and our head of business development, Mike Pearson. And then towards the end of September, we're going to do one on the fall forecast, taking a look at the housing market again with Rick Sharga, I think I noticed a few names here who you may have participated in the one we did with him earlier in the spring. But he brings a lot of good data that you guys can take advantage of and help you find markets you may not have thought about, borrower types you may not have thought about, and just to get a sense of where things are going. He's pretty much one of the most cited and quoted people in most of the trade publications when people are interviewing people about all the various forecasts, as well as Max. So I think combined those two webinars in September, it would be wise to join up for, because you'll arm yourselves pretty well for the rest of the year. So that's everything I had to cover. You can scan again. You can scan this QR code to jump right to the become a partner page. Oh, there's a problem with the QR code, the other QR code. I'll get that updated and we'll send that over. I think there was an issue with that. Okay, so the appraisal being ordered through our system, is that for brokers only? That's for you, Mark. You're muted. You're still muted.
Okay, I'm good. What is the question?
The appraisal ordering through our broker portal.
We mentioned it earlier,
Is
right?
it, yes,
So
but
you would
it's for brokers only.
Yes, of course. Anybody who's delivering to A&D Mortgage, you must go on to our appraisal center after disclosures are signed, and you would go there to order your appraisal. Brokers only.
Okay. Oh, and you and your team got a nice little shout out from Helena. They love working with you and the company. Our team rocks. Thank you for the thumbs up,
Yep.
Helena. So hopefully
Nice. Yep.
hopefully that'll be the experience that everybody here will have if they're not a partner with us. So okay, that seems to be the end of the questions, and we're coming up to the end of the hour. So we share the final results on the last question for the poll. And again, I would encourage everybody to check out our blog, sign up for these additional webinars. Again, I'll send an email out. It'll be sometime probably tomorrow that'll have the PDF of the PowerPoint presentation, links to the video, link of the recording of this presentation, links to those blog articles that I mentioned, and some signups for the other additional webinars. So that I want to thank you, Mark, for your time and your expertise in all things condo and condotel. With that, I want to thank also the rest of the attendees who've joined us, and there'll be a brief survey when you guys go to log out. If you guys can take about 30 seconds to answer those questions, let us know how we did, suggest any topics for future webinars that you might be interested in us doing, some deep dives into off the mark subjects. And then if you've got any positive or critiques about the webinar itself, go ahead and let us know, and we'll do everything we can to make the next ones better for everybody. So with that, have a wonderful rest of the day. Have a good end of the month.
And I have one more thing to add. If you have any questions concerning my East Coast team or myself, you could send an email to mark.glas as in Sam ER @admortgage.com. Send me an email, drop me an email, and if I can help you or I could put you in touch with your AE, my pleasure. Thank you.
And I'll include your contact information as well in that email. All right. Well, thank you, sir. Have an excellent day.
Thank you all for coming.